Good afternoon. Welcome to the Thursday, March 21st, 2024 public meeting of the Kansas City Land Bank's Finance and Audit Committee. My name is Mike. I serve as the executive director. We do ask that members of the public limit their questions or their comments no more than 2 minutes per speaker. And with that, I turn it over to the committee chair, Rebecca Holderness.
Hi, totally not used to this. How is everyone? Stacy, I saw some updates, but I wondered if you wanted to go a little bit more into detail about where we are at this moment.
The only thing I can add on from these notes is that we are now closer to $100,000 to for the LBI-2 reimbursement. So we're collecting expenses, and we'll submit that in shortly, and then we'll have $100,000 more in the bank that'll offset some of the expenses that we've had since beginning of the year. So tell me how you would like the meeting to go, Rebecca, because usually I go through line items, and I think that we don't want to do that anymore. So that's why I sent
I would actually say that this is the environment in which to go through line items, right? That the bigger board meeting is where we don't necessarily need more than a top-down view. Mike, could you give us some direction on that? And you're muted.
So what I was saying is, I guess I'm a little confused too, Rebecca, because that was what we were doing at this meeting. You're absolutely right. This had been that meeting to run through this, and maybe I misunderstood it too. I had thought that you wanted to stay top level in both meetings, or maybe talk about kind of more broad topics or strategic initiatives or things like that. And that was, maybe I'm confused. We're happy to jump into the way we used to do it, if that's what you want to do here.
Since this is so new to me in every way, and I would ask Aaron or Barbara to feed in on what you think is the best use of this time, or Stacy. I really don't have an answer to that question. I do think, Mike, what I meant was that we could, do top down in the board meetings. You know what I mean?
Okay.
I could be wrong about what I meant, because I really am swimming in a completely unfamiliar pool with not a lot of lines on the bottom of the pool. So I figure out what to do. Aaron, what would you suggest that we do, since you have longer board membership than I do?
No, I mean, I don't know. I think at least going through it on a cursory level together, the line items and or like any questions on that makes sense. Just so we have even if we're not doing it with the whole board, just so we have an eye on it, just to keep that that habit.
I mean, my thought was, that's what I thought, but I guess what I meant to say was that we could do the overview and then report to the board that we've done the overview, and that we have this top down whatever, summary is the word I'm looking for. I don't think that this is such a fast moving environment that there'll be a lot of change from month to month. I don't know, Aaron, but it would be worth looking for change in our cursory overview. Do you know what I mean? Like, if there's anything that we should remark upon. That's what I think. Barbara, do you agree? I mean, I really have never been any of the things I am right at this moment on this board, in this position, and dealing with this paperwork on a monthly basis. So do you agree with that?
Yeah, I agree. I have the attachments open. Are we gonna start getting like a variance, or like see the change month to month? Or that's something I know we talked about at the retreat. So that could be helpful, because that could like quickly identify the changes.
Well, why don't we start with what we have and then decide what we want to do?
Yeah.
So Stacy, do you mind pulling up anything that that seems relevant? We could take a quick look at what you used to go through line by line. We don't need to go over it necessarily in the detail, but if you could point out things.
I normally send the financials, which I sent you all, and that's what I pull up. So I'm going to pull it up. I'll share my screen.
Yeah, if you wouldn't mind changing the screen, I was going to For some reason I can't get into my email right now, so. I should-
Okay, so we have here, this is the balance sheet for Kingston City Land Bank. And most things that I talk about is we have our a cash balance here, which is pretty healthy right now. It's because we had some sales and some reimbursements of some of our grants. So I have like 3 screens over, so I'm sorry if I'm not looking directly at you guys. And then the next item is a accounts receivable. And I'm gonna have to drill into that. Again, I prepared for this. Apologize. I prepared for this as if we were doing treetops because that's how we left last meeting. So let me just go and drill in on another screen. So okay, so the $44,000 accounts receivable, the next line item is that the Kingston City, the KCLB Maida owes the Kingston City Land Bank $24,000 for the development fee. We're keeping that cash in that bank account over there just so we have less fees, but it's a payable on their books and it's a receivable on this book on these books. And when everything clears out, it's going to be paid back. And then we have $20,000 of owed back to us. Let's go see back down, drill down.
Is the fixed, is the asset price of Franklin, is it the highest we've ever had a property at before at disposition?
Yes,
It's extraordinary.
yes.
That house.
Mhm.
Oh my God.
Okay, so the $20,000 that's on the books. So 24 of that, out of the 44, 24 is the development fee, and then $20,000 is we sold 291 303 West O'Reilly on the 27th of February, but we didn't receive the cash until the first week in March. So it was due to us at the end of that month. The next is just an intercompany back and forth. Sometimes KCLB pays for things, and then we just, when the rec gets funded, we pay it back. And that's what this $2,800 represents. Prepaid expenses is that we pay our legal and our insurance upfront in January, and then I expense it over 12 months. That's generally accepted accounting standards. The next stays the same. It's the investment in Maida. Our equity in that partnership is 500,000, and that's an asset to this entity. And then the next is fixed assets. Like Aaron said, that's pretty high. We're just about at the edge of that. There's only one more expense that's coming through, and it has to do with the radar system that we put in, and that's about $7,000. We have all allocated of funds from Novo funds that covers all of this. So we're in good shape. We don't have to use any of our unrestricted cash for this. And then as we go down, every time we have increase in basis, it gets added to this where we spend money on whether it be electrical, getting an electrical panel set up. They're all capital assets, so they get added to basis, and that will keep these increasing. And then when we start to do the actual work, depending on how, if we're going to spin this out to legacies 2 or not, it might stay in here, some of these properties, or they might be spun out into another entity, and then you'll start to have the asset being built as we build it. We have some new ones on here, which I had told you about. We purchased Teller, we purchased Harati, we've purchased Abby and Stefan. So those are all gonna start increasing in the amounts here as we do the different parts to get those ready to whatever we're going to be doing with them. So that's what's happening in this. We have built our website. That's $12,000 is right here. At the end of the audit, they're going to give us an amount that we're going to amortize this over. So it'll amortize over the right amount of years that the auditors have prescribed, and we'll see an added to this next month. Probably we'll see an amortization line item. The next is accounts payable. This is $708, and it's insurance. So basically, it's a bill in February that we don't pay until March. So that's this entity. Let's go to, does anybody have any questions?
I'm good right now.
This one, and then 1 second, I'm gonna move this for a second. Then we'll go to the this is the profit and loss. We had interest income, and it's a big number this month because we had the CD come due. So we I recorded the interest in that CD when it came in. The auditors might change that. They might accrue it as over the time of the CD. It depends on what their rules are. So that might change for the next time. You might see something a little different. Then we had $235 in donations, and the property sales was the 291 -303 West O'Reilly. That's the 20,000. Then we go down, and these expenses are mostly regular expenses per month, and they are within the budget. We keep track. And talking about the budget, I think there was something that we decided or discussed last meeting, that we weren't going to do an actual to budget because it was confusing. So the reason why it's confusing is because we have two things going on at the same time. We have construction, and that is very hard. And I think the Owen and Kyle, they basically do a budget to actual in that. So it would be interesting to see it in this too. So it's a little confusing. Also, some of these expenses aren't equal over the year. So it gets more confusing to do an actual versus budget. But we can discuss what that might look like. And I'm open to doing, something different. So for instance, like property costs here, it's not equal all during the year. So your actual to budget variance is going to be really not informative. So you can see it's pretty simple this month. We don't have a lot going on. We're getting Franklin, is almost all ready to go. So these are the normal expenses that you might see in a year. Again, the only thing is probably due diligence and a property cost that might change over from month to month. And this cost of property sold was the actual cost of what to us was, well, it's actually going to be more because this is, excuse me, this is the 301-303 cost to close it, is the 1478. But we now have another cost that Mike informed me of, that we had to pay the city for, based on the disposition policy, we had to pay the city for that property because we sold it. Do you want to talk to that a little bit, Mike? Maybe you can help explain that.
Sure. Yeah. So just to recap, the disposition policy that the city passed last year, the council passed, had two different methodologies for determining how much the Kingston City Land Bank pays for properties. So those properties can either be single family, 2-family residential, obviously land, or vacant land. So in the instance of vacant land, which is what 291-303 West O'Reilly was, if the Kingston City Land Bank sells the property to someone else after we purchase it for more than the full price, the full amount of fees and back taxes that the city was owed, we owe the city the full price of those back taxes and municipal fees, less the amount of broker price opinion and or appraisal that we conducted. So that amount is roughly $11,000, and I just dropped the check off a few minutes ago.
Yeah, so you're gonna see that added to it, because I'm gonna go now after the fact and put a journal entry in to show that. So that number you'll see will increase. Questions on this one?
No, thank you.
Okay, so now we're gonna go to the KCLB Maida balance sheet. And here I had told you that we left, a certain amount in here. If we took the amount that's owed to Kingston City Land Bank, that would make this bank account really low, and which would then have service charges. So we wanted to keep that in. We know it's a payable. It's in here in part of this payable here, so it's all booked and everything. Here you can see Rogers and Hurley. So it's interesting. So what did we say was so Rogers is 549, Aaron. I'm gonna just go back for a second and look at the balance
So
sheet
close.
of it is very close. 552,
Close.
you see?
Right.
Yeah. So but we have one more rec for Rogers, so it might exceed it, it might. So we'll see.
I get the numbers lower, not higher.
I know. But the good news is that we have the funding. Everything is working out. We're not,
Right.
we're not we don't have to put money, more money in, which is the
Yeah.
goal of this, is like, so
Yeah,
it
yeah.
worked out. Okay, so that's, here our assets, and then we have our accounts payable here, and it has to do with the development fee that we owe to Kingston City Land Bank, and also the amount we owe to Maida. Again, the RAC comes in at the end of February, and it sometimes doesn't get paid until March. So it's just a timing thing. And this is the retainage right now, so that will be paid out probably on the final RAC. And yeah, and that's this is what we owe to CPC, the bank, on the construction loan right now. So looking good. So looking good. Does anybody have questions on that one? Okay, we're going to go to the profit and loss, and we have no income because nothing was sold in this month. And we just have our regular bank and interest charges here. And the soft costs are basically things that get reimbursed by the bank for I'm trying to remember what they might be, insurance and some other expenses, but it's all within the same amount usually. And again, we have a RAC and we send it up to CPC and they have to approve it. So it's all expenses that are approved within the budget. And that's that. So this net income
Thank
loss
you.
really doesn't mean anything. That's why these kind of reports are interesting. They're standard reports, but it's not really meaningful right now.
Thank you.
Mhm. So if you wanted to just go back to the treetop view of everything, there's the properties that we purchased, and then I said what the total cost of all that is, and you saw them. They're all within those categories of the basis of all of those. Back to, like, if you go to the balance sheet, or go back to the this. So right in here, we keep, anytime there's costs with title and legal, it gets part of the basis. That's part of the rules of how you say what the define what the basis of properties are. So we added that to that, and then the sale is you'll see that that property doesn't exist on here anymore because it was bought and sold in the same month, the 291. And then we have some additions to the Legacy City properties, Stefan and Abby, those also were closed upon this month, so some additions were also legal in title. And then we had a property that was donated, 143 Third Avenue, and we had to pay closing legal and title, and that gets added to this piece right here. It's part of the basis. And then my other comment was that the CD matured to 250, and we had nice interest come in. And then this is what I added on to this. We're accumulating invoices to submit. Now it's up to we expanded the scope of it. So now we have almost $100,000 to submit. I think that was what Mike's threshold was, 100,000. We didn't want to waste the time of Crystal, right? Crystal's.
Yep.
Yeah. So we're just about there. So we're going to make another submission. That'd be great. And then the expenses within the budget and for the Legacy Cities, we just finished with Rec 17. There's just a little bit more happening with that. I think punch list items. And so you'll see that. We'll see where that comes in at. It'll be interesting to see if it's Franklin or Rogers are higher. But Rogers is the larger of the property, so it makes sense, right?
Right,
But less troublesome.
totally.
Yeah. Yes, so that's it. If anybody has any questions about all of this, and if you
I
want
have
to talk
one.
about okay.
Sorry, just for the CD, did we renew it or were we gonna?
Yeah, so what
roll
we did
into a
was,
new CD?
so we hedged on in I think it was in January. So I think a CD was coming due in February, but we were worried that the interest rates were going to come down. So what we did
Right.
was we bought a new CD in January before the other one renewed, other one matured. So we already had 200, we had actually $500,000 at one time. So basically we just let that one mature when it did, and we got into a higher rate in
Okay.
January.
Got it. Understood. Thank you for reminding me.
Yeah.
Otherwise, I'm set.
Thank you. I didn't mean to make that a improv performance. Sorry. I do think it's useful for us to go over things so that we feel confident at the bigger meeting. So I'm sorry if I was confusing about that, and if it's inappropriate, you're just gonna have to tell me, because I really am extremely new to this in many ways. So feel free to give unsolicited advice at any moment that you would like. If you could stop sharing though, I think maybe that'd be helpful from a viewing point of view.
Sure.
Thanks.
Barbara, do you think your question at the beginning that having like I know we've seen it before. I know Stacey's prepared it before, like especially for the income and expense, like a month after month, so you can see on a rolling basis changes over
changes.
time.
Yeah, I can't remember if that's what we talked about. If it was, I think it was when we did the breakout committee at the retreat for that, maybe instituting some kind of reporting just to see the changes month to month, but
So
it
I have a
doesn't have to.
question for
yeah.
Stacy about that, because we also had a conversation about the choreography of accounting in this particular circumstance, right? And how things are moving through. So my question for Stacy and Mike was, if we were going to do something like that, would it be clearer actually to do it on a quarterly basis than on a monthly basis?
That's a good question.
What do you think, Stacey?
I'm not sure what you're asking. Are you asking to compare it to budget, or you want to see month over month?
I'm trying to figure out what it is that Aaron and Barbara want. I think Aaron and Barbara would like, I think Aaron has spoken about it before and Barbara has spoken about it also. So why don't you guys just articulate more clearly what exactly it is that you want to see and how often you want to see it?
Oh, I think it was just like an income and expense, so you can see change over time, right?
Mhm.
Like, yeah, just like year to date kind of thing. And it,
Yeah, I did that last year, remember for
I
you,
do. No,
Aaron,
no,
and
yeah, yeah.
yeah.
Mhm.
I did
Yeah,
it last year and I kind of, but again, we had this other meeting that
yeah.
it was sort of like, we want as least as possible. So that's what I prepared for this time. But next month, we can prepare for, I can do January, February, and March. You could see it all in a row, which it would be interesting.
Mhm.
That's not a problem whatsoever. I think the problem happens is when you do actual to budget, it's not a very useful, um, piece of information. We talked about
I'm
it.
Yeah, I'm more curious about seeing kind of how our actual expenses evolve as opposed to the because I understand that our budgets are done, well in advance and fungible and not
Yeah,
always
those
accurate over
evolve
time.
in a
We,
different way.
we get pretty close though.
Yeah.
We do. But what happens
Yeah.
is we kind of, so we have different funding, right? So when you have different funding, so I worked on just now with the auditors to see what's left in the funding, right? So that's an interesting thing because we're giving, let's say, Novo 8. So that was given to us. Novo 8 was given to us at the end of 2022. Okay. So it appears in our financial statements in 2022 because that's when we got it, but it's for our expenses in 2023. So it's very difficult to show you that in a financial statement. It just does not even make any sense, right? But I'm on the side keeping track of, all right, this was given to us for our operating expenses. And so I'm going through the year and I'm sitting there saying, okay, how are we spending it? How are we spending it? But then all of a sudden we shift gears because we say, oh, actually, this funding would be better suited for that. So what I might be giving you today might change in 6 months to be like, oh, we decided that we're not using the Novo funds for that. We're going to use these funds, right? Because another opportunity comes up and it more, the Novo funds are more, I want to say fungible, Mike. I don't, they're
Yeah.
more
No,
like
they are.
they're not like, okay, this is specific, but our other grants are more specific. So we're trying, as we go on through the year, we're trying to figure out how best to not use our unrestricted cash. So that's the goal, right?
Mhm.
And I think we've done a really good job doing that because again, we talk about it and we move things around, but at the end of the day, I have to do an audit at the end of the year and they have to know to prove into it. But it takes time. So every month might look like something and then all of a sudden it changes. So I feel like it's not like that stuff isn't like, and I like to tell you like that big overall view and
Mhm.
Mike and I work on it, together. But I think it changes so much that I think that comparing financial statements when we want month over month, it's not going to be right. You're going to be confused. Like, why was last month? I'll pull them up. They look different. And I don't want to get into that kind of thing. Uh, and it's just a
Right.
lot of explaining. So I think that's why Rebecca was like, when she was hearing my spiel when we talked the last time, counting is complicated. And the way we do accounting is very complicated. And we have different fundings and all that kind of stuff. And that's why I think she wanted to keep it as simple as possible, which I really like. But I'm happy to talk about these things in here. I think those things are valuable to talk about, to tell you guys how we're doing it and how we're, moving, using the funds. So right now, Novo 8, which we were given in 2022, is not, we haven't spent it all yet. So we still
Mhm.
have that. We can't put it into unrestricted funds, but we know that we still have it. So that's really good news. I think at the end of the day, if we're having a lot of unrestricted cash and it keeps, if we sell these properties and they just keeps accumulating, that's great. Then we have these unrestricted cash that the board can make a decision how they want to utilize it. And so, so that's the goal that we do behind the scenes is trying to keep our unrestricted cash intact and utilize these funds, this funding in the most efficient way. So now we have 8 is still available. Here we are in March, and we still have stuff from 2022 that we got still available. And now the whole entire Novo fund that we got in the end of last year, which will show in the financials for last year, but not supposed to use it until 2024, hasn't been touched yet, and that's $350,000. So we're in good shape, is what I really want to say in all of this. I feel like we're, I think we're going to start spending some of it, and again, it's all going to be based on the plan that we make on how we're going to move these properties that we just got forward. So it's
Yep.
all like linked together, legacies too, all that kind of stuff. But we're in a good position. I
I agree. And just maybe to add to one of the issues that will come up with the board relates to, we were awarded in September of 2022, I think, $1.8 million LBI2 fund
Right.
with a dedicated requirement that we continue spending the money and complete doing so by the end of 2024. And so now we have this restricted funding source that can be used for X, Y, and Z, and it does have a due date on it. So when the bids come back from the general contracting for Legacy Cities 2, we know that we can obligate LBI2 funds to use for that. Therefore, we wouldn't use, as Stacy was mentioning, the Novo funds, right? We know that we have a dedicated funding source for that. The excess amount above that will produce a new series of analyses as to where that money should go, but that's the money that we're trying to spend first. Right behind that, it'll come to you on Monday, I believe, the ARPA contract for $1.1 million, which is restricted for various things, again, somewhat flexible, but with a spend date of September of 2025. And so like Stacy's always juggling these kind of weird, sorry, we get all this weird money, Stacy, that's like got all these strings attached to it.
Arbitrary
But
deadlines and things.
it totally.
Yeah.
Yeah.
And so that's a part of the in and out. It's like top line, as Stacy said, really good position, unrestricted cash, great. The ins and outs of, do we have funding to pay for the activities that we're either undergoing or planning to undertake? It's absolutely yes. What are those activities? Sometimes that changes, and sometimes that changes the funding sources from month to month.
Yeah.
But
right. And
hopefully that
these are
makes
some
sense.
of these are reimbursable grants. So it's like you're spending the money first. So you'll see it in our financial statements on
Right,
the P&L. We spent it, and all of a sudden now it's going to be months later that you'll see the money come back. So that's why the financial statements are so, I wouldn't be able to interpret them, as a lay person, or not even, even if you have experience, it's a unique situation. So that's why, I was like excited about being at the treetops in terms of the financials. But again, if you have other ideas of what you want to hear in this meeting, we can absolutely,
I
hear you and
found it
think about it.
helpful to go through the details, even if sometimes sometimes it's boring, other times it's a little more complicated and there's more questions and you have to explain things to us. But I mean, just being on this committee over the past year, I have found it helpful, even when I don't understand something, to have you explain why you're accounting for something in a particular way. But I
No
defer to others as
problem.
well. Rebecca, if you have,
I do think this is the place to do that.
yeah.
Because we want to keep the board meeting, the general board meeting moving through all the things that we have to talk about. So I think, going over it with a lively, sort of brisk look at all of the paperwork, but without spending too much time on it. Also gives us a context, for instance, to look at other paperwork we might look at the board meeting or at A&D, like Owen's paperwork or whatever, right? And it gives us places to ask questions if we don't understand what's going on, or something is not clear to us, because we also don't, at least I feel like I don't have a lot of input into the day-to-day operations, even though I seem to spend a lot of time at committee meetings, so it's sort of like, it also helps understand kind of the, part of that ebb and flow of financing has to do with also the ebb and flow of the work. So, so taking, being to say with more clarity this time, what I think we want to do is to take Stacy, if it's okay with you, to take a quick look through this with the paperwork that you've already established, the ones that we just looked at, and then do the overview at the board meeting. You know what I mean? And then if the questions arise, we can bring them back to this committee the next time it meets or at some point. Does that make sense to you guys? As a methodology, that's what I'm really trying to get at. Does that work, Stacy, without putting you on more work? I do have a quick question, and I don't want to, I would love for us to go by 2:15 would be excellent. And thank you for being flexible today. Just really crowded day. How is the audit going? That's really what it's going well. Yeah.
Yes, yeah, it's going well. It's going much smoother than last year, which is good because now I have another year in our audit. And there is a new person on, and she seems to be, we communicate every day. She asked me for new stuff or everything, but we just answered the last, I think, there was a management questionnaire that we just submitted today. And I also, so I think that by the end of this week, they might be done with their work. And then there might be a management representation letter, which they'll send so that I think Mike has to sign it. And then I think it should be, mid-April, I'm hoping, which will be fantastic.
That's
Like,
amazing.
I
It's
know.
amazing. Look at
Great
job,
that's a year
Stacy.
ago. Yeah, thank you,
Yeah.
Stacy.
That's
You're
great.
welcome. Yeah, it's like, and I feel like with all these funding sources, because that's when it gets really like to them, that information has to get really specific because they have to figure out when that is revenue compared to when we think it's revenue. So it's interesting. So as we get more funding sources, I think that it might get broader, the audit. And if we have more entities, like if we do legacy cities too, it'll get broader. But I think I mean I'm happier with this year's because I feel like I have more of a handle and also the accounting firm has more of a handle on it. So yeah, it's good. It's like
Yeah.
early.
Great.
It's exciting.
Just wanted to make sure it's going okay.
Yeah.
Yeah, and
I
feels
think that's
better
the
than
beginning of the-
last year, right? Okay, any other questions, relevant questions? I will bring the overview as you sent it to us today or yesterday to the meeting, as the word from this committee, the report from this committee. Is that concur with everyone else's opinion? Yeah. Okay, and just to reiterate, so there's no further confusion. So what we're going to do at this meeting is take a brisk and lively look through the documents we just looked at, right? Coming prepared with any questions that we might have had from the other month, like if we were looking at something in the board meeting we didn't understand, or we're curious how things are going with the audit, or any other questions that we might have, right? That are more specific to this activity. And then we'll do a high end. I think of that as pretty high end, right? It's like not down in the weeds of what you guys are doing, right? I don't know, but and then at the board meeting, we'll do what is really a synopsis of what changes are. Does that reach clarity? Is that clear? Okay.
Yep.
I'm sorry if I was confusing, Stacy. I would never make more work for you if I could help it. So.
Well, I thought you were making less work for me, so I was very excited.
Well, I'm trying to make a
So
little
when
bit
you
less
changed
work.
it today, I was like, what?
I think we are probably charged with at least looking at the documents. Do you know what I mean? I think that's probably our charge. So,
Yeah.
but we promise not to make you explain them in German or anything. So it'll be fine.
And the treetop notes in the email distribution help. When you say expenses are in line with budget, at least we know we won't have a very complicated discussion.
Yeah. And I did still want to go back to the expenses. So like the expenses are covered by grants. So it's like they're not so meaningful to kind of understand what those, they are in line with the budget and they are covered. So it's like we're not using unrestricted cash. So that I think that was an important message to give you guys today. Maybe that helps to kind of clarify any kind of worry. I don't know if it's a worry, if it's the right word, but any kind of, question about it. So all these expenses are covered. So it's like, okay, we're good.
And they're outlined in the actual grant applications to some extent. Is that correct? Or
again?
do you present a budget for the use of this money when I'm applying for this grant? You submit a budget for what you're going to use it for?
Yes.
Right. Right. So from the tip top, we know that this 10,000 like this $8 that we got was, earmarked for chocolate milk, right? We know that, right? So
The
because that's
chocolate
what
milk
they gave
grant
it to
is
us.
underway. Rebecca,
Yeah.
that's my
But-
update. We're working on the chocolate milk grant.
But
Yeah.
it's not that specific though, right? So it's like it's more categories like pre-development, all that kind of stuff and admin thing like that. That's more.
It just works a
We're-
little bit different than revenue, like, cost of COGS and revenue, right? A little different, right?
Yeah. And even, even like when you see these expenses, it's like, oh, these are expenses, but they're covered. So it's like, it's like, I'm trying to think of maybe a different way of presenting. I'll think about it. Maybe that like might be helpful for you. Like, all right, so here's the LBI 2 grant, and here's how much we've spent out of it. And sometimes I can take a report and I can splice it, to different columns, but I have to think about if that's going to make it complicated for you guys to kind of read it that way.
Why don't we just get through the audit and get, you know what I mean? Like get through that whole part of the year and whatever it is that we have to do. And then if we have more questions about how things actually operate, maybe we can articulate them. I really don't want to give you, Stacy, more work to do. I mean, what I said last time is true, which I think is if the bottom line stays stable, then we know what we're doing, right? Then nobody is going to Cabo for a wedding on the Kingston City Land Bank, right? So, so that's just part of our charge, right? I think it's interesting for us to see, and I would only be concerned or interested when we get into a timing snafu, which is a kind of, like we have to use this money by this time, right? So how do we make sure that we don't lose that money? How can we, that's going to take some agility, and, that's just interesting to observe. So I'm sure we have that agility. It's just interesting to see.
Mike's working on it all the time. He sleeps and breathes it.
Right. I'm pretty sure Mike is not a person who wants to leave $1 on the floor, right, by accident. So
As long as it goes back to the organization, why should we?
Right.
Makes sense.
all
We're
right,
on it.
so I am at 2:15. I think, are we,
Thank you.
Barbara, are you satisfied? I know you had questions and concerns. Are you?
No, I'm good. I think this helped, and I think we're all aligned now on, next month and what you're gonna bring, to the board on Monday.
Okay, thank you for helping me achieve clarity in this, and thank you, Stacy, for an intelligent improvisation. And you can stop recording, Mike, and we can go on our day.
Okay.